Second. Second by Bill, all those in favor? Aye. Nay. Moving no resolution, we have an ordinance. Ordinance 58-061526.
So
Lisa?
this ordinance is essentially the same ordinance you guys saw last month and approved. We had to make some technical edits, one of those being the number of multifamily homes that's listed. It's been updated to reflect the taxpayer agreement and the updated project agreement that was approved by council. So those are some technical edits that were made. And then with the process, EDC had to approve a piece before it can be formally adopted. So that's why you guys are seeing this back before you. You guys can suspend the rules and pass on this reading and it'll be fine. If you feel more comfortable to just have first reading, the developer, we can still close on the bonds by the August timeframe. But just with the technical edits and the correction of the process, that's why you're seeing this before you once again.
Just some changes to some details.
Yeah, no changes to the size. It's still the conduit debt that's going to be bought by the developer. As I mentioned last month, the developer has worked with Hagerman Capital. So Hagman Capital is going to buy that bond for them. So that's why you see those referenced in the documents. But it is developer backed. And as we've talked about, that doesn't count against our debt limit. And it's not debt of the city in any way. And we are not responsible for the debt service payments.
Okay. Any questions for Lisa on this correction that we're having tonight at the council? We have a motion to recommend for approval tonight. Alex made a motion. Have a second.
I'll second.
Second by John. All those in favor, please say aye.
Aye.
Opposed, nay. Let's have it. Moving on to regular items, 2026 update.
So I'm gonna share my screen for you guys very quickly. Can you guys see that?
Yes.
All right, let me know if I need to bump it up a little. But just to kind of walk through, I know you guys had asked for a financial update. So this is a package that I put together each month and send on to the mayor and to Elliot to kind of review. And it walks through pretty much kind of all the areas we're interested in. So just from a quick overview, this really hits.
Make that a little bit bigger, please.
Yeah.
Just a little.
Yeah, let me know that better.
That's good. Thank you.
Okay. Yep. So this is general fund revenue. So just kind of takes what you guys saw in the 2026 approved budget, does it kind of a pro rata amount, kind of where are we favorable or unfavorable. So how 5 months through the year, where are we? Obviously, as you guys are well aware, property taxes don't come in ratably. So that's where you kind of see some unfavorable variances on the very top column. And then the very bottom line, I'll go a little bit bigger, but in May, we received our special distribution for local income tax. As you guys will recall, we do factor that into the budget when we do it. It is calculated, it was what we expected. But the reason the lit looks high is because we did receive that special distribution in May. And that's just something that occurs when the balances get too high and it's money that we were owed, but we finally received that. So that's kind of a high level, kind of things are about where we would expect, just kind of early in this year. Nothing to kind of be aware of that's concerning. Fire protection, we always do twice a year, kind of semi-annually. So that's that big line down here. Interest income, we're continuing to keep an eye on, and I'm working on kind of trying to project that, get that up a little higher. But that's one that's we're looking at. But overall, kind of where we would expect in the general fund for May. so that's revenue. This is really general fund expense kind of broken out by the departments. So really the approved budget that you guys approved down there matches again kind of that pro rata assumption. So kind of over here, as you can see, again, everybody's a little bit where we'd expect. Police is having some personnel. We're watching that. Personnel is really high at the beginning of the year for a variety of reasons. A lot of that, if you guys will recall, we've had a lot of discussion about 27 pays in 2026. One of the things that happened is January was a 3 paycheck month. So that does not happen very often, but we started off the year with that. So again, continuing to kind of keep eyes on that. And as you guys will see down here, this is really just all our major categories, kind of where we are in there. Personnel, obviously our biggest expenditure. A lot of that is related to health insurance, which we do at the beginning of each quarter. So it doesn't go really ratably very well there. So that's the general fund. Everything else has been pretty good. I will just hit kind of on NVH. As you guys know, there was suspension of the gas tax. So we are still receiving gas tax distributions from the state, and that's reflected here. But we'll continue to see. I would assume that will pick back up. The tax will start and will continue to be pretty strong. But that revenue is pretty good on that. So we look at that. We look at sewer operations, pretty much everything in line on sewer. I look really high there, as you guys can see. My budget has the pilot payment, which you guys are aware of, but that pilot payment was made. So I have a little bit of a higher variance there for me. Jonathan's crushing it right now in sewer and helping account for my variance being a little high, but everything with sewer looks in line. I'll show you stormwater. As you guys are aware, we pivoted this year and we are now doing stormwater as part of your sewer bill. So have had really great results with that change. And so stormwater is continuing to come in pro rata over the year, which is a big change for us, but everything is in line with that. So those are kind of the big funds. And then I will show you, you guys are well aware, Monica kind of got slashed in the health department. She's picked up a lot of revenue elsewhere, particularly on the vaccines, out there doing sports physicals also, but she's continuing to come in line with her budget as expected and hopefully will maybe exceed her revenue budget a little more, which would be great, as she's, working to really supplement slashed funding that she, has gotten from the state and elsewhere. But those are kind of just a quick overview. Yeah.
Bring down the food and bev real quick.
Yeah. Yeah.
Number
Me... Yep. Yeah. Yeah.
We had a conversation about how's the events that are done for the city of Fishers. We passed the food and beverage tax to help pay for that debt service payment wise, but this shows we historical and year to date through the months, and you can see we just continue to climb. April of this year, $416,000 in 1 month on our food and beverage. So we started in 24. I guess if you go April from 24, 250 to 272 to 416, 305, 347, 354. So month over month, year over year, an increase in our food and beverage revenue, which I can't say it's all related to having the event center, but it's certainly economic development begets some strong numbers here. So that's a good news story for us. We budgeted close to $4 million, we think, this year, which all goes to our debt service payment to the event center. I think we're on pace to exceed that, which is fantastic.
So yeah, you guys can see, and as you guys know, there is a little bit of a lag, so you do see some spikes, but seeing really great numbers. And in all honesty, we've only continued to see the food and beverage continue to increase as we've gone through here. So I will say the 416 was an outlier where we had a major business catch up on their tax, but then to come back in the next month with 354, it's still another strong month, and that month did not have someone catching up. So if we can keep 350 or higher as we go through this at our new normal, that's just great for the Economic Development Fund to pay that debt service as we move through things. So that'll just continue to go up. And I know we get a question a lot of, are we collecting from everybody? And every so often we go through and match up who has a food permit from the health department with who has remitted from the state. And so kind of match those up. There's not a lot from a compliance perspective you can do from the city. I have my team and we send out letters that say, hey, you have a food and beverage, you have a permit with the health department, you are probably liable for food and beverage tax. You need to remit this. Unfortunately, the state's the one that has to audit them and make them pay. But we do send out, I call them friendly reminder letters to everyone to make sure they're aware of their liability on the food and beverage side. So I was just going to hit the major funds. I don't know if anybody else has a question about any other funds that I didn't discuss here or just a general overall.
Two comments. Number one, this is great. I'm glad you're putting this together. It's kind of a nice snapshot of what's going on financially with the city. Secondly, I wouldn't mind if it's able to always have this distributed out to budget finance committee members every month so they get a look at it now. So we have a chance to come in with any questions at the monthly finance meeting. So if we could get a copy, this would be great. So thank you.
Yeah, more than happy to put that out there, and after I send that on and we disseminate, yeah, I think that is definitely doable. So I won't show you that we do look at the impact fees too, and just we had such a stellar year last year on park impact fees and road impact fees. That's not happening currently, but obviously we had enough last year to cover a lot of that. But impact fees are so development driven. It's kind of a high year or a low year, but nothing concerning on that front because we were not expecting another astronomical year. So pretty much in line there on the impact fees. But yeah, happy to answer any questions you guys might have.
Any questions, Lisa, on that particular document? Thank you, Lisa. That was wonderful. Next item on the agenda is personal property tax TIF area update.
Yes, I get to be really, really nerdy here, so watch out, everybody. So Senate Bill 1 made an adjustment to personal property. And so what it did was eliminate the 30% floor for new property placed in service, except as everyone interpreted it for businesses in a TIF district. So just a quick, really nerdy accounting talk really fast. Personal property is the value of the assets inside a building. So you can have personal property, I'm just going to say valued at 100,000. You go through and you say that property is expected to last 10 years. And so every year that value decreases. So what the 30% floor did was say, if you have a $100,000 asset that has a 10-year life, at year 10, that value is zero. But with the 30% floor, it's kind of like that value stays roughly very, very generalized at 300,000. So it can never go to zero, no matter how old that asset was. You were still paying a semblance of tax on a value of that asset. So obviously removing the 30% floor has some impact of you don't get as much property tax anymore or personal property tax on that. So that's concerning. However, they did say in a TIF district that doesn't exist anymore. So initially the Hamilton County Auditor Assessor's Office, they had got a list of all businesses that were in TIF districts and were prepared to look at all those personal property tax returns and accurately track those businesses. I think, John, when we had talked last month, we were concerned about whether the county would be able to comprehensively track and know what was in a TIF district. And so when I talked to them, they do have that. However, the state has taken the approach and informed the county that the 30% floor only applies to personal property tax TIF districts. The state is saying it doesn't apply to just a general business located in a TIF district. They can go to zero. That was not the interpretation that we had, that Barnes and Thornburg had, that everybody had. So we're continuing to work with Barnes and Thornburg and work on that kind of, I'm going to say, language or interpretation, because that is clearly how it was not interpreted by anyone outside the state. So we're continuing to work on that, but I think the key takeaway is that the county was ready to track individualized businesses. And I think that was probably, to me, the biggest concern we had. Is there a mechanism to make sure that they are not going to zero and that they're still getting that 30% limitation? So that's kind of where we stand on that. Happy to answer more questions, and sorry for the nerdiness there.
Well, from one nerd to another, it's just fine. Any questions for Lisa on this particular item? Just something I've been kind of in on to make sure that we get every single dog that's coming our way. So, any questions?
So we're obviously continuing to work and track that, but I think like I said, I was impressed that the county was ready and willing and had a list of all the businesses and had actually informed those businesses that they were not eligible to, go to zero. They were still subject to the 30% floor, and then they got different guidance. So we should get that straightened out, but they are ready to go. And I feel comfortable that they're going to track pretty closely those businesses once able.
Confident for new business? The audit will be complete.
The audit is going pretty well. Emily from Forvis was on my flight on Sunday. So, which is a very small world. She's down for a Forvis conference. But we're working on wrapping everything up. We had a little bit of a delay and a change in that we are now pulling in the Fishers Event Center into the financial statements. So you'll see that when we release the audit and when that gets completed. But that kind of took a couple of weeks of discussion amongst everybody to get that kind of treated accordingly. But yeah, we're on track.
Why is it included? Why is it included?
Because technically, if you look at the terms of the agreement, all of the assets, like the money in the bank account for the terms of the agreement, is the city's. It's the terms of the way the lease agreement and the things are written that we should pick that up. That as the bank account and the money in there and the activities kind of flow with the city. So that was kind of so.
You got an asset that's being financed by city revenue, and in all factually, it's our asset, it's the city's asset, right?
Yeah.
Okay.
Yeah. So that will be, and there'll be testing done on that in the city. So we had discussions about audits for the event center. Now with it coming under the Fishers umbrella, it kind of eliminates the need to go out, and we were looking at another audit to do. And so this will get tested as part of the city's audit in correlation, since we're pulling it in now.
And that's probably going to be an increase in fee.
Probably. I have talked to ASM, and both Tony and I at the event center had talked about what the fee would be for them to do an audit. So we'll carve out that piece and at least put that with the event center. And we had talked about that,
Okay.
doing that previously.
Thank you for the update. Anything else, folks? Let's get back to you, Bob. I'll have a motion to adjourn.
Thank you guys.
Second.
Good night.
Marissa, see ya.
Yeah.
Bye. Thanks, guys. Bye.
See you, Lisa. Thank you.
Yeah. Thank you, guys.